our deliberations again after years.
So wherever we are sitting, we are having a round of applause for our guest speaker, Jayesh
Yes,
Gupta.
yes, sir.
Sir, over to you now.
Yeah, thank you. Thank you, Rishi ji. Thank you, Neha, so much. And I'm so very glad and more than delighted to have this opportunity from Views Exchange. Really kind to have permitted me to speak here and on the subject of Gift City. I'll take it forward from here. And very good evening to all my audience and people who are listening to this presentation. So the program which has been structured is in such a manner that I'll be speaking for an hour and there is a presentation also there. After my deliberation is over, you guys, if you have any questions, you can ask. So we'll try and avoid the questions in course of the discussion because most of your questions would get answered in course thereof. So what we are trying to understand is that what is Gift City? How does it operate? As a professional, what opportunities are available? And going forward in time to come, what I can look at from Gift City even while operating from Kolkata? What advisories I could give to my clients? Possible areas of structuring, possible areas of doing business. That is the whole idea. Few slides I'll go in detail. Few slides I will just refer and move on. So a very basic question which is always asked to me that what is Gift City and how does it operate and how does it function? So primarily Gift City is one of the first smart cities in India. We call that as smart for the reason that it has smart electricity features, smart drainage system, smart allocation of infrastructure, and that is why it is referred to as smart, the way the infrastructure has been developed. Now this entire area which is in blue dotted line is typically Gift City, and it has been divided between a SCZ area and a non-SCZ area. What you see in black dotted lines, that is the SCZ area, Special Economic Zone, divided into two parts, which is NPA and PA. That is, PA stands for provisional area, non-provisional area. Now, PA is the area where the commercial space is built up, where offices are there, and non-PA area is the one where residence is there, college and universities are there. So like all other SEZs, we have this SEZ within the black dotted line divided between PA and non-PA. Now, where does the concept of IFSC come in? So where you have a unit which is located in the PA area of the SEZ, an office, and that particular office has been given an approval from the regulator, that unit will be qualifying as a IFSC unit. And the tax incentives are available only if you are a IFSC unit. International Financial Center, which is IFSC, which stands for, and it is primarily in SEZ, which is promoting services. A lot of questions come to me that if I am a manufacturer, I'm importing diamonds, and if I'm manufacturing jewelry, can I set up a unit in the Gift City as a IFSC unit and can I avail tax incentives? Answer is no, because this SEZ is primarily dedicated exclusively to services, financial services and ancillary financial services. So if I am having a trading entity or a manufacturing entity, there is no point setting up a unit in the Gift City as a IFSC unit because tax incentives would not be available. The regulator would not grant an approval unless and until it is a service which is associated with financial services. So we have domestic tariff area and multi-service area. Domestic tariff area, which is outside the SEZ, where you will have domestic banks. You can transact business from there. I'll give you a small example that will give you a fair idea what is the relevance of domestic tariff area. So if you are located in SEZ and there are banking units within the demarked geographical area of the SEZ, Those banking units are termed as IBUs, that is an international banking unit. So imagine a situation where you have an employee who is coming from Ahmedabad city and he is working in your office. Obviously, you will be making payment of salary to that person, which cannot be in a dollar denominated or foreign currency denominated payment. So what you need to do is there would be banks available in the domestic tariff area, which is outside the SCZ. Any area which is outside SCZ is a DTA. So you would be having a bank there as well, which you can use for defray expenses in INR. The banks which are located in the SCZ, they would be used for defraying expenses and payments in foreign currency. GIFT City is the first notified IFSC of the country. We don't have any other IFSC as of now, International Financial Services Center. We have this concept borrowed from countries like China, places like Hong Kong, Singapore. They have this concept where they demark an area within the country and they call it as an offshore area. So within the country, but deemed located outside the country. What are the benefits available? Because there are a lot of doubts on that also. I will cover that. So going into what are the applicable rules and regulators there, this is the very basis and that would give you a fair idea. When we talk about the domestic tariff area, which would include Mumbai, maybe Delhi, maybe Kolkata, all these are domestic tariff areas because it is outside the SCZ, Ahmedabad in Gujarat itself, even though GIFT City is in Gujarat. So now there we have multiple regulators for multiple activities insofar as a DT area is concerned. For foreign exchange, you have to go to the RBI. For securities, we have to go to SEBI. For insurance, we have to go to IRDA, and for pension related, maybe PFDRA, and Companies Act, Income Tax Act, and so on. So if I'm setting up a unit in GIFT City IFSC, all these regulators, which are the special category of regulators, RBI, SEBI, IRDA, and PFRDA, all are merged, and we have one window approval scheme where there is one single regulator called as the IFSCA regulator. And it's a separate body, separate office, separate website. We would be governed by, or a unit located in the IFSC would be governed by the rules, regulations, circular clarifications, notifications issued by IFSCA. So units which are located and which are qualifying as an IFSC unit, they are not required to go to RBI, SEBI, IRDA, or PFRDA for any of their business activity. All their business activities would be governed and directed by the IFSC regulator. Now, in a scenario where I have set up a unit in the SCZ, but I have not been given a license by the IFSC regulator, possible. So if I'm not being given a license by the IFSC regulator, I can still set up a unit there and carry out my activities over there. But I will not qualify for the tax incentives which are available for the IFSC unit. IFSC unit, if it gets a license from the regulator, will you qualify for the tax incentives? If I have not obtained any license from the IFSC unit, but I'm still operating my business in the SCZ, I would be governed by the SCZ Act and the SCZ rules like all other SCZ in the country. There are multiple regulations which the regulator has come out with, and they are available on the website of the regulator. Banking, capital market, gold bullion market, finance units, ancillary services. So variety of regulations are in place, and that can be explored on the website of the regulator. So IFSCA is the regulating authority. Gujarat International Finance Tech City Authority is primarily looking after the infrastructure. Development Commissioner is the person who heads the SCZ. And there are state and local authorities like the municipal corporation, like the electricity development board, and so on. These are the people whom one has to interact if you are located as a unit in the SCZ or a IFSC unit. Moving on to the opportunities which are available. So if an entity which wants to carry on business as an IFSC entity, these are the primary areas through which presently businesses are permitted. Capital markets, where you can set up a unit as a intermediary, as a broker over there, or as a portfolio management service provider or an investment advisory services provider, insofar as a capital market is concerned. We have mechanisms for lending and credit, where a finance unit could be set up, or an alternate investment fund, similar to what we have under SEBI as category 1, category 1, 2, and 3 AIFs. In IFSC, it is called as the Fund Management Entity, FME. Then we have something similar to NBFCs, which you have it in domestic tariff area. In IFSC, we call it as a finance unit. Nomenclature change, but primarily doing the same type of activities. Gold, bullion, and bar activities also permitted, vault being set up over there. A person in India can import the gold and bullion and silver through the IFSC instead of importing it through the banks in the domestic tariff area. That option is also available. Aircraft and ship leasing activities have been permitted. They are tax incentivized, resulting in the cost to the lesser much lower, no withholding tax, no taxation. So they would like to carry out the leasing activity through the gift city, promoting aviation activity and the ship business in India. Fund management and advisory, as I explained to you, FME, which is an alternate to the AIF, what you have over there, a similar entity could be set up there. These are the grouped bifurcation of the businesses which are possible. Capital markets, offshore banking, emerging activities could be universities, fintech hub, international trade finance, offshore management, AIF, wealth management, portfolio managers as investment advisory services, offshore life insurance, reinsurance, etc. These are broad groupings of the permitted business activities as of now by the regulator over there. Now, this is something which would be of interest to us. Permitted ancillary activities. Now, these are activities which the regulator has permitted, whereby one can go ahead and set up a unit over there and take an approval from the regulator, where they will give you a license. You can carry out these activities over there as an IFSC unit. The question that would arise is, why would one like to do that? So if you are providing these activities as an IFSC unit, in such a scenario, you will be entitled to a tax incentive, which is a 10-year, 100% tax holiday on the income generated from these activities as an IFSC unit. Now, what are the challenges which we face over here? The challenges is that in a scenario where a professional organization or a chartered accountancy firm is operating business in Kolkata and listening to the tax incentive, they feel that there is a possible tax arbitrage available and therefore I should go ahead and set up a unit over there. The challenges are that for every ancillary activity line item, there is $1,000 charge which has to be paid to the regulator. Plus, then there is an annual charge which has to be paid. So for setting up a legal compliance or a secretarial service activity office over there, I would be incurring somewhere around 3 to 4 lakh cost per annum, exclusively towards the regulator, but depending upon which all services you want to provide. So every line item, there is a cost involved. I'll be sharing the possible cost there, plus the infrastructure cost involved, which anyway would have been there if you would have set up an office elsewhere in India. Now, the issue over here is that if you obtain a license approval from the IFSC regulator, then they prefer or they prescribe that there would be a ring fencing carried out in as much that the moment you become an IFSC unit, your services should exclusively be targeted to the units located in the IFSC, not even SCZ, only to units which are IFSC approved or to people who are located outside India. That means there is a ring fencing to the extent that you are debarred from providing any services to domestic tariff area. You are debarred from providing any services to other units in SCZ which are not IFSC units. So consequently, a question that would arise in a professional's mind that the area and the scope of my services are restricted because I am eligible only to provide services to IFSC unit. Still then, the way businesses have grown over there, it is remunerated to set up a unit there and provide services in these areas. Almost all big fours are there. All big legal firms are already having their place over there because they are anticipating going forward, businesses would have tremendous impact and impetus over there. They are also trying to set up alternate dispute resolution mechanism centers over there, similar to the court in Singapore, so that the cost of carrying out arbitration is also lower. That is one more area which will be characterized under ancillary services. And if one is an early bird and starts looking into these areas, can set up an office there, keep on soliciting business, present over there, perhaps business would grow. That is what I feel. Going forward, it is also possible that the regulator may go ahead and remove or relax the ring fencing to permit the services to be provided to IFSC as well as non-IFSC units located in SCZ. But presently, these are the criteria which they have done to ensure that the tax incentives which have been provided are not leaked out and people do not start optically using their offices in the gift city IFSC, providing services sitting outside the SCZ to entities other than the IFSC entities. That's the whole background idea. But this is one of the promising areas for us. We fall primarily, our activities fall under prime permitted ancillary services, and we can provide services to all those IFSC units which are otherwise doing businesses there. There is another program which they have come out with, which is termed as a direct listing program. A unit which is an Indian public company or an unlisted entity or special purpose acquisition companies or SPV, SPACs in US, SPVs over here. You can get listed on the exchange over there. This will enable liquidity to you. This will enable a lot of funding where Indian public companies which are not listed in NSE, BSE because of the listing criteria which are draconian, the costs involved, unlisted private companies which are similar to startups and they are looking at funding, the listing over there will give a good goodwill and recognition, whereby investors will try and explore that how you've been faring, and since you are listed, the possibility of obtaining funding becomes easier. However, there are certain threshold criteria which are there, revenue criteria, profit criteria, period criteria, those thresholds are there. If you meet those thresholds, it becomes easy to raise funds. Now, one question which comes to me a lot is that if you are located in the domestic tariff area, for example, if you're located at Kolkata and you want to set up a unit in the gift city, how would the fund movement happen for setting up a branch or a subsidiary or an entirely new entity in gift city? For example, if JPNR Corporate Consultants having their office at Kolkata plans to set up an office in the gift city and wants to obtain an IFSC regulator license, how will they set up the entity and how the fund movement would happen? I'm addressing that part. Primarily, when the funds are to be moved from Kolkata to a unit which is set up over there, in that event, you are subjected to the FEMA regulations applicable to India. The reason being, gift city is a deemed entity located, a deemed offshore location, where even though it is physically in India, but it is demarcated and assumed to be outside India. Consequently, when I'm moving any funds from India to a place outside India, the OI regulations under the FEMA guidelines, FEMA law become applicable that oversees investment regulations, the rules and the master direction, whereby you are governed by the regulations prescribed over there. You have to fill in Form FC, provide the valuation report, fill up Form A2, GIFT in CACB, your financial statement, give that to the AD bank, and then they will remit the money to your IFSC entity in the GIFT city. The IFSC entity which would be set up in the GIFT city would be governed by the provisions of Companies Act. You have to open up the companies, a company if you want to open up in accordance with the Companies Act, LLP according to the LLP Act. Those formation provisions and laws would continue to apply. Once you have set that up and you have opened up a unit over there, the license has been given, you open up a bank account, then the remittance will happen to that dollar denominated account from your Indian entity to that entity. Thereafter, you need to open up a separate INR bank account where you will use INR for defraying local expenses. The threshold criteria for remittance of money is 400% of the net worth of 1 billion. If more than that, then you have to take prior approval from the RBI. All those other criteria continue to apply. Primarily, the FEMA regulations will operate for movement of funds from India, domestic area to the GIFT city entity. Initial funding, if it is by individuals, then individuals will be governed by the LRS limit of $250,000 per annum. Any additional funding required over and above this will require prior approval from the RBI. Presently, I have examined a couple of cases where RBI is not granting any approval for any additional remittance, whether to GIFT city or from India to an overseas area. So by and large, 250,000 is something which RBI is permitting that, and nothing over and above it as of now. These investments which are being made to the GIFT city are repatriable. They can be remitted back if you dilute the entity or close down that entity, and your capital investment will come back to your account in India. However, in either of the cases, there is a high possibility that you will be subjected to the exchange fluctuation which is happening. But if you refer to a period of time, maybe a 6-month period or 1-year period back, one would have gained by parking the money over there because of the exchange movement which has happened between dollar and INR. One would also look at what are the possible setup costs in GIFT city, because this is one hindrance where a lot of people who had inclination to set up business have declined, because for the reason that high net worth amount is prescribed to be locked and the cost involved, the fees involved is also high. I'm giving you a fair idea so that you are in a position to advise your clients and maybe give you an insight over it. If I'm looking at setting up a finance company which is similar to an NBFC in India, what activity a NBFC does over here, similar activity would be performed by a finance company over there. What could be more specific areas that I'll take it up in my subsequent slide, and there would be questions on that as well, which would be answered in my slides and later on during the Q&A session. So application fee is about $1,000, which is one time. Registration fee is about $12,500 one time. Annual recurring fee every year is $12,500 every year. Now, in a scenario where I have set up a finance unit, for any reason it does not operate and I do not find enough juice over there, perhaps I'll try and close down and come back. That will result in the loss of the first two items, about $13,500, because it's a one-time fee, non-refundable. Apart from this, there would be an SCZ application fee about 5,000 INR, SCZ registration fee 30,000 INR, annual recurring fee for using their online portal about 5,000 INR. Apart from this, there could be other operating expenses, which could be an admin expense ranging between 80,000 to 1 lakh INR per month. This excludes the employee cost, which would be dependent upon the number of people employed there. This is the initial cost of setting up the unit, apart from the ROC fees, apart from the local fees required under Companies Act, Income Tax Act, etc. GST law, which would be for registration, PAN, TAN, formation of company, blah, blah. That is regular. There is nothing special if you set it up in the gift city. Apart from this, if you are setting up a finance company, they expect, the regulations prescribe that the net owned funds, that is the capital plus reserves, would range anything between 0.2 million to 5 million USD. So 0.2 million, where you are setting up a finance company and doing certain businesses which fall under the non-core activity. About 3 million USD if you are setting up business which are specified in the regulation under the core activity, and some specialized businesses that would require about 5 million USD. Now, what could be an example of a non-core activity? So if the finance company is involved in providing operating lease services, that would fall under a non-core activity. Whereas a finance company, if involved in providing financial leasing services, that would fall under a core activity. Specialized activity could be anything relating to factoring businesses, ARC businesses, etc. But nothing has been notified so far under the special category. Fund management entity, which is similar to a AIF, the application fee one time about 2,500. Registration fee one time 5,000 to 10,000, depending upon which category you want, category 1, 2, 3, which is authorized FME registered, different categories which they have mentioned, enabling you to do different classes of business. Annual recurring fee, modification fee, blah, blah. All these are fees which have to be paid initially to the IFSC regulators in dollars, for SCZ in INR. 80 to 1 lakh per month is the general admin cost, as I explained earlier. Net worth requirement is starting from $75,000, running up to $10 lakh, which has to be maintained and achieved for a AIF. Now, what businesses a AIF could do, I would also try to take it up in the subsequent slides. Quite interesting. I've been doing this for my couple of clients. If you're trying to set up an insurance company which is involved in a reinsurance business, these are the one-time fee, recurring fee, etc. prescribed, plus the SCZ fees. They run between $1,000 to $11,500, plus something which is turnover based in case of an insurance company. Ancillary services. This is the area which is of interest to us, because as a professional, we would fall in this area, which I had been explaining earlier. So we have to pay license fee for setting up a unit, an application fee $1,000, registration fee $1,000, annual fee $1,000. Now, mind you, this fee which you are looking at 1,000 is for each category of ancillary services. For example, if I'm trying to provide legal services as well as tax representation services, my fee would double, because I'm trying to provide two types of ancillary services which are falling under two different categories. So more the areas, more the fee, and that is how it would be worked out. Additionally, in INR plus the admin and operating expenses. There is no net worth criteria prescribed for setting up a ancillary services unit in the gift city. This is another interesting area, family offices being set up. A lot of high net worth, ultra net worth individuals are now planning or setting up family offices. Gift city regulator or IFSC regulator has also permitted setting up a gift city office over there. They have come out with a regulation. Now, one challenge which is foreseen and why this business is not picking up, unlike overseas jurisdiction like Singapore or Luxembourg or maybe Panama or maybe any other jurisdiction, they also permit setting up of family offices. However, they do not prescribe identification and maintenance of a separate official address for the family office. So the convenience provided is that a public accountant over there, similar to a chartered accountant in India, if he has an office there, he could provide a desk space and an address to the family office, whereby the family office is not required to maintain an administrative setup, infrastructure for carrying on their activities of investment. However, this feature is presently lacking in GIFT City, wherein the regulator is requiring a family office to obtain a physical presence and a physical address there, have an office there, keep an employees, which is identified as a cumbersome activity for the high net worth individual. Now, typically, what does a family office would do? In a scenario where a person who is an Indian citizen but is now presently NRI, and he has some assets located in India, he has some assets overseas, maybe or could be investment in companies, portfolio investment, strategic investment, assets, immovable, movable, and similar thing in India. They could all bring the same under one roof, under the category of a family office with a manager or a trustee. There are no tax implications at the time these assets are settled or contributed by the contributor for the beneficiaries. Subsequently, when income is generated by this family office, now this is the catch, for 10 years, the whatever income the family office generates, it would be an IFSC entity and that would be immune from taxation, 10 years no income tax. This is why a person are willing to set up, but the only hindrance is the physical address. If that is done away with time, possibly more people will flock to India, as the cost of maintenance is lower, hinterland benefit is available, and they would be more happy to have their similar offices in India, what they are having overseas. Application fees $2,500, registration fees $15,000. Now here we have a minimum corpus requirement of USD 10 million, which they have to achieve it over a period of 3 years. That means the entire portfolio should be of about $10 million, but which could be done over a period of 3 years with a net worth of minimum $75,000 to be maintained. Now this slide is actually to give you an idea how businesses are growing up in GIFT City. If you look a comparative over a period of time, insofar as the banking business is concerned, we have banks over there of ICICI, the units are there, HDFC, Federal Bank, Axis Bank. Almost all banks have set up the units, by and large the big ones. And those units are termed as an IBU, that is a international banking unit, because they have been given a license by the IFSC unit. They also provide a lot of finances which are comparable to the rates at which the foreign banks provide overseas. So they could be areas where one could explore obtaining credit finance, goods finance, package finance, and so on from these entities. They do that, working capital, blah, blah. Another interesting area which I am now working upon, and I have got a clearance from the regulator, is that if an individual has set up a entity in IFSC, any of those, finance unit, IAF, etc., but they have their assets in India. That could be, the assets in India could be provided as a collateral, and the foreign branch of the Indian bank possibly could fund the IFSC unit by way of debt. Now this is quite interesting and things can be planned out. I will be taking up case studies later on this aspect, but if you observe that over a period of time, the businesses have grown, the areas have grown. If you look between March 23 and 24, you will see that there is a substantial increase in the banking business volumes. Now, this increase in the banking business volume itself is suggesting that there is a high growth of business happening, otherwise the banking business would not grow. Finance units have been set up. Registration has been granted for 37 entities so far, 15 entities in 23-24. The balance have been granted in 24-25. They are involved in a lot of core activities, as well as non-core activities. A lot of entities are primarily involved in aircraft leasing, ship leasing, ground support start leasing, ship business. This is one area because a lot of tax incentives are being provided for. The value of transactions which have been carried out is USD 12.91 million so far, insofar as aircraft and ship leasing is concerned, so far as a finance unit is there. Capital market activities have also grown over a period of time. We have onboarded quite a number of brokers over there when this GIFT City had initially started. And you will observe that we have two exchanges. Okay, now we have a BSE and NSE over here. Similar exchanges have been set up, which is called as the India International Exchange, which is the arm of BSE, and NSE International Exchange, which is the arm of NSE. I think someone has.
I would request all the participants to please keep themselves on mute, please. Sorry, sir.
India INX has about 59 broker dealers, and NSE INX has about 67 broker dealers, which is growing over a period of time. The brokers have set up their offices. The exchanges which are there is quite interesting that they operate for 23.5 hours. That means 30 minutes less than 24 hours. So Indian exchanges, they close down around 3:30. Commodity exchange continues for quite some time, but these exchanges over there, they continue throughout, even while international exchanges are operating. A person may possibly explore the area of hedging for the transactions which they have carried out in the domestic exchanges at NSE and BSE. If they anticipate or fear about the global exchanges carrying out transactions and there is a distortion in price over a period of time, these exchanges could be used. However, presently, we do not have what you call that, an exchange is there, but we do not have that depository participant over there. And therefore, the cash market segment is not there. We have derivative segment over there. So one can carry out a trade in derivative and hedge over there. However, so far as individuals are concerned, we have restrictions on derivative trading even under the LRS limit. That has to be kept in mind. If you observe that the turnover and number of contracts have grown over a period of time, this is a ballpark figures giving you a fair idea that businesses are growing even in the capital market segment there. These are the turnovers of the exchanges. If you see at 23-24 figure, the volumes and the pillars, if you see, they are quite high compared to earlier years. Again, showing you that the businesses are growing. That's the whole idea, to give you a fair idea that business is growing in the exchange, but definitely it will take some time to stabilize. Fund management entities have been set up. Total schemes which have been approved is under 11. Under venture capital schemes, restricted schemes, we have about 104. Total 115 have been approved so far on the date of this presentation. I have figures only till March 31st. Further figures have not been made public, so we have not tried to gather that. Total investments which have been made in so far, 3696 million USD. That's a whopping big figure. And this is one big area where people are seeing business. I'll give you a fair idea why this is a very good area and people are working upon this. Is that we have NCLT and NCLAT operating in India, and they are identifying assets which are distressed in nature. So people are setting up AIFs in the GIFT City and trying to acquire those assets through the GIFT City entity, where the income generated by the AIF in the GIFT City enjoys a tax immunity of 10 years. And that is why the business has grown over a period of time. Insurance business, if my regular business is growing, so is my insurance and reinsurance business. The insurance written and rewritten, you see a whopping increase in both 23-24 for written as well as intermediary services of reinsurance. Fintech entities are also doing businesses there where they are mixing technical with the finance and providing software related services in the ancillary service capacity. And that business is also going, but it has not taken up so big. It is more capital intensive because they are setting up data centers, AI centers, etc., which are approved by the regulator, and therefore there is a tax immunity of 10 years. Let us go into some case studies to understand how these businesses are operating, and a lot of your questions would get answered over here. Now let us imagine a situation that there is an entity which is located in India, outside the gift city. I call it as India, and domestic tariff area interchangeably I'm using it. There's an entity which is set up in gift city, say G company, and then there is a foreign entity which is outside India actually. Now, one possible question which keeps on coming to me is that A Limited has set up the company in in the gift city by infusing equity and debt. Now that money has gone and is parked in the IBU, that is the International Banking Unit in the gift city. How do I use that money? Can I go ahead and reinvest that money in India? Not possible. So a blanket thumb rule, money which is going from India as part of the capital, whether debt or equity, of a gift city entity, that money cannot be redeployed in India. So question that would arise is, what would I do with that money if I moved that money from India to gift city? One, that money could be used by deploying it on the international exchanges as investment, by keeping it as an FD in the IBUs over there, by giving it as a loan to other IFSC entities over there. The catch is, whatever profits I generate from that is exempt from income tax or not taxable for a period of 10 years. Second thing what I could do is, I could go ahead and use that money for lending outside India. And for that, I'm not required to go to RBI because my regulator would be the IFSC. So there could be a possible structure which I would try to test. Say A Limited has already a wholly owned subsidiary in Dubai or maybe in UK, and it further wants to give money to that entity by way of debt, not by way of equity, or even by way of equity, either of it. So if A Limited, which is located in India, goes ahead and makes further investment in that particular entity in UK by equity or debt, the income which is generated and received by A Limited in India would attract taxation, either as dividend or as interest, and even subjected to withholding tax as applicable in UK or Dubai, wherever it is located. I for one would like to structure this transaction that whatever additional funding is required, I would try and set up an entity in gift city and deploy that funds to the overseas subsidiary or entity through the gift city route. The income which is generated by the gift city entity by way of debt or equity would be exempt from income tax for a period of 10 years. One can explore these areas, but one has to be alert enough to structure it in such a manner that we do not go ahead and fall under the category of a colorable device, triggering Supreme Court judgments and triggering GAR. Now over here, one also needs to understand that even though I am an entity which is located in gift city and I am considered to be deemed located outside India, my regulator is the IFSC regulator, but the Income Tax Act continues to apply as it is. Companies law continues to apply as it is. The provisions of GST and customs law continue to apply as it is. A question which comes to me time and again, will that company which is located in gift city or the entity which is located in gift city, will that be regarded as non-resident? The answer is no. The entity which is located in gift city, albeit is deemed to be considered located in an outside jurisdiction, but for income tax purposes, it would be regarded as resident and ordinarily resident in India. And all the tax laws as applicable to a domestic company or ROR would continue to apply. And therefore, it is essential to understand that even though I am a resident, ordinarily a resident or a domestic company, still I am going to get the tax holiday by virtue of other provisions of the tax laws. Now, second interesting scenario or what could be worked upon is the gift city entity which is set up if it receives funds from foreign entity. If the entity which is a gift city entity has taken license from the regulator, is the IFSC approved entity, and it receives funds from a foreign entity. Therefore, a question would arise in the mind that why a foreign entity would give me funds. Now, this is something which I'm working upon. In a scenario where A Limited has assets located in India, A Limited goes ahead and gives those assets as a collateral to the ICICI Bank in India. ICICI Bank Singapore goes ahead and grants funds to the gift city entity. I understand this is possible. Unofficially, the regulator has told me, yes, there's no regulation in place as of now. I'm trying to structure this. Now, this fund which is coming in from the ICICI Bank Singapore to G Company or the gift city entity can use this fund and defray it as a loan to other entities in India, earning interest on that. So even if my spread is about 2%, still because of the tax holiday available and no withholding tax, it would be a substantial business to look forward to. Ideas. Another possible scenario is where the SPV is set up in gift city entity or gift city entity SPV is set up and it is involved in a leasing activity. So leasing could be acquisition of an asset outside India and leasing that asset to an entity in India. That is possible. So that entity is set up by sending funds from India's equity and debt. The gift city entity receives the basic fund from the Indian entity X Limited. Thereafter, it can go ahead and do the borrowings, open up credit lines from the IBUs located there, acquire an asset outside India, and lease it out to another company, say Y company in India. The lease rental incomes earned will be exempt from taxation or will enjoy immunity for a period of 10 years. No withholding tax on lease payments being made by the Indian entity Y Limited to the gift city entity over there. Again, I receive a lot of questions on this particular slide as well. I have set up a IFSC unit. An entity in India has set up a IFSC unit. Now, this IFSC unit can use the funds which is received from the Indian entity as equity and debt by defraying it within the IFSC area, defraying it overseas. It cannot use that to invest in NSC and BSC. So in such a scenario, the IFSC unit cannot go ahead and invest in NSC and BSC out of the funds which have been sent from India. But it can invest in the international exchanges there, defray it over there, and even go ahead and invest in global exchanges across the globe through a separate platform and window set up by the international exchanges by BSC and NSC. That is possible. The benefit is that there is a tax holiday of 10 years. On the other hand, if any funds have been received from overseas or an overseas entity sets up a IFSC unit, then in that event, the IFSC unit has to also go ahead and take a registration with the SEBI under the FII category. And then that IFSC unit can go ahead and do investments in NSE, BSE, simultaneously do investments in the international exchanges and enjoy the tax holiday which is otherwise available. Then we have this business of bullion exchange. The bullion exchange and vault has also been set up. Now, how does this business operate? There are derivative instruments which have been permitted over there, where a person can go ahead and carry out a trade in the derivative of gold and silver. Alternatively, if you have gold and silver available with you, you can go ahead and get that stored in the vault created under the Gift City structure. They will issue you a depository receipt, and you can go ahead and trade that on the bullion exchange. In other words, creating liquidity for your gold or silver, which is lying, but again, there is a threshold criteria for that. That has to be met for you to enable that. Additionally, gold and silver import into India is permitted only through the specified agencies in India, like PSU banks, MMTC, etc. Presently, they have permitted to import gold and silver bars through the entities which are set up in the Gift City. And in case if you find that more cost effective, lower charge out because of the waiver of customs duty, then one can look into or advising their clients in importing gold and silver, not directly locally, but through the Gift City entity. However, this business is still evolving and has not gone full-fledged because the jewelers and bullion operators of India are not convinced with the model, and they are just waiting that who bells the cat first. Okay, now there are a few more things. The presentation is done. There are a few more things before I actually move into Q&A. Just let me close this 1 second. Yeah. So apart from this, there are a couple of things which needs to be discussed upon. Is that when I'm setting up a unit over there, it is highly possible that one may try and seek an exit after some period of time. So what is my exit route? So the moment you plan to set up an exit, you need to go ahead and approach the SCZ authorities first, because they ask you to execute a bond. Because in a scenario where you will be importing goods, buying goods locally without payment of taxes and duties, you have to get that bond surrendered. Whatever charges are payable, you have to pay that, because now you will be moving the goods which were duty-free to the domestic tariff area. There would be a depreciated amount of taxes which has to be paid. You have to approach the regulator, IFSCA. If they will ask you to produce an NOC from the SCZ authority, they would also ask you to produce an NOC from your infrastructure provided, the real estate authorities. If there are any fees and charges are due, that has to be paid. Then the IFSC authority will go ahead and give you an NOC. You need to take that and apply for liquidation under the company's law to close down the company or dissolution of the LLP. Now, the moment you do a liquidation or dissolution, the surpluses, if any, shall be paid out to the shareholders in India, and they would be governed by the regular income tax provisions of taxation where there's a liquidation happening or a dissolution happening. In another scenario where you are operating businesses in India, questions come to me that whatever profit is generated by the Gift City entity by investments from India, how do I bring back those profits into India? How can I use those profits? The only mechanism to bring those profits back into India is either through the dividend route or the remuneration route, and in case of LLP, share of profit route. All these are exigible to regular income tax provisions, and there is no special provisions when these profits are being remitted. Insofar as the LLP is concerned, the profits are enjoying immunity from there, already 10-year tax holiday. Then distribution of that profit to the partners again will not be subjected to tax. However, in case of a company, dividend distribution will attract regular slab rate of tax. Sale of equity will attract capital gain. Remuneration will attract regular rate of tax. That is all I think. I was allotted 1 hour. and I am able to complete that well within the time. I will now take up all your questions which you have. As many you want, we can discuss them. Thank you so much.
Thank you, Jayesh. I have one or two very basic questions. One is a GCC, which is primarily global capability centers. Many of the companies, overseas companies, are establishing in India, and they primarily do things like financial transaction, O2C, order to cash, P2P, R2R, such transaction. Does it make sense for them to open an establishment in GIFT City?
Definitely it does, and GCC is the new business area which they are looking at and exploring, and very likely it is likely to grow very big, considering what is the exposure you have and considering the amount of net worth you want to maintain.
Okay, and well,
Only challenge with which you will face is the employee.
okay, and do I need to be physically present there? Like, as you said, in family office, one has to be physically present there. For GCC, suppose I establish in Kolkata or any other city and also get registered myself in GIFT City. Can it function like that?
No, optical trade is not permitted as of now for any business. So the physical presence is required, employee record is required. They will do a physical check and a surprise check. They would identify you are operating. If you're not operating from there, license gone, penalty applicable.
So then that's again a big challenge, because normally GCCs have more than say 100 plus employees, even a smaller GCC. To have GCC there, and I think this GIFT City, is it a dry state also?
So for GIFT City, they have permitted the liquor permit in the clubs, but then you have to be along with some specified permission for people, because a lot of expats are coming in there and it cannot be kept that way. The government understands that, and they have permitted that within the domain of GIFT City. There's a club also there, but then you need to establish that you are actually not a resident of Ahmedabad or local.
One more thing, there is a under the ancillary activities, you have this like LPO, legal process outsourcing. Can I establish a legal process outsourcing there?
Yes, possible.
Okay, and does it need to be a new unit? Like suppose I'm already having a LPO there and it's tax inefficient because I have to pay a lot of taxes being outside in a DTA. So does it do I have to have a new company for that, or you have said a unit and all can be, but it can be a reconstruction or of an existing company also?
So there has to be a separate entity altogether.
Okay.
Presently, the regulator is not permitting a branch in either of the categories. So even though regulations say so, but they are not granting approvals. So they force you to set up a separate entity to ensure it is ring fenced.
Okay.
And either LLP or an entity has to be there.
And I can divert my existing business of LPO, which is primarily an export business, export service, export business, to this new entity. That should not be a.
Very much.
Okay. Okay.
Good afternoon.
Thank
sir.
you for your this thing. Any other questions?
Sir,
Neha, CA Neha, you can take up other questions if it is there.
Sir, I have a very basic question regarding the permitted ancillary services only. Over there, sir, trusteeship services was also mentioned. So trusteeship services is basically on the taking care on mutual trust. Actually, it's basically mutual trust. So, sir, do we have any kind of example of trusteeship services in the permitted ancillary services area?
No approval has been granted, or no one has approached the regulator till March, to my knowledge, in the category of trusteeship business.
Okay. Sir, and one more basic question: can NRIs also invest?
Having said so,
yes.
I don't feel any reason why they will deny it if you have a business case in place.
But sir, I don't think I personally believe that how can there be a business case in case of a trusteeship service? So can we have some example?
Yeah, I can give you an example.
Yeah.
In a scenario where there is a family office which has been set up, point one. In a scenario, in case of a ship leasing, if you understand the ship leasing business, in ship leasing business, there could be, like in reinsurance, there could be a further subletting of the finance portion, where one of the entities or person becomes a trustee for ensuring that the funds which is being promised by one person is paid by the other person, for which you charge a fee. That is prevalent overseas, but in India it is yet to catch up. A simple example could be, I am giving you a loan of 10 lakhs. Bank is not involved. I need a third party guarantee. So a third party guarantee would be that trustee business for which he would charge a fee. That is a trusteeship ancillary activity.
Thank you so much, sir. Clear,
Welcome.
sir. Of late, sir, we haven't heard something in so much detailing of late.
So that is why
No
he is
problem.
a teacher. And sir, I still remember how you taught us how to read an act in between the lines, and which I apply not only just in professional field, but everywhere else also. And it really helps us till date.
So much.
Any other questions?
I think there's something there in the chat.
Let me read it out.
In the chat,
So basically, INR 25 to 30 lakh minimum will be drained in the first year and will be sunk cost in case one would not be able to survive and discontinue in the next year.
Definitely, depending upon which class of business you are looking at.
Yes. So very pessimistic.
okay. So I think, Neha, if there are no further questions, you can request Pallavi for the formal vote of thanks.
Yes.
I think so. Pallavi
But
is not there.
before Pallavi says anything, Mr. Gupta, I am really enlightened about Gift City, and it was really a wonderful session. I was sharing this with Neha also, and that it was a wonderful and those practical insights that you have, it will really help us in guiding our clients, and we may come back to you in future for guidance.
So for more topics, sir, please enrich us with your practical experience.
Sure, I'll try and do that. So kind of you to shower those tall words.
Oh, sir.
Very kind.
So Pallavi, is she?
I
Pallavi,
would-
are you there?
Yeah, Neha, I would request CA Naveen Singhal to give a vote of thanks for the session.
Thank you so much,
Thank you.
Pallavi. I, Naveen Singhal, Deputy Convener of Use Exchange, would first of all like to thank all the participants for coming on this Wednesday evening on a weekday. And we have again become students again. Sir has taught us in so much of detailing. He has enlightened us with the cost and also the benefits of investing in a gift city. And which we professionals have again become students. And thank you so much, sir. Your presentation was flawless. And I would again thank the participants and our guest speakers. Sir, thank you so much. Thank you.
Thank you, sir.
And requesting all the participants to please like our page on YouTube. It is there live on YouTube right now. And you can navigate and again review the session again. Thank you so much. Thank you.
Thank you.
Thank you. Thank you.
Thank you, sir. Thank you so much.
Thank you so much, everyone.